The headline earnings of African Rainbow Minerals surged 40%, largely on the back of strong export coal prices. Mining mogul Patrice Motsepe's company paid 3 billion rand in dividends and has its sights on diversifying with the acquisition of Mokoni mine. Business editor Xolani Mbanjwa caught up with the ARM CEO Mike Schmidt earlier to discuss the miner's performance in the last 6 months.
ARM is a diversified mining company. And so, whilst in many aspects the stars don't always line up, is as one commodity moves, the other one benefits. We talk about maybe long winters, short summers, but the diversified portfolio and the strategy of the ARM under Patrice and his board has always been is to get yourself into a good mix, not only in terms of quality assets, but also to lean on ultimate dependency on what is logistically bound requirements and what is precious metal, and how do you feed into the refined market or the smelting, and those always play a hand going forward. So I think it served us well. All of the commodities and operations performance is better than the previous 6 months, but probably most importantly, that assisted the company was the coal performance. And when I mean coal performance, I mean financial performance. On the back of good financial pricing, we've managed to capitalize on that and yield exceptionally good profits. Pleasingly, all the loans have been repaid and distributions in the terms of loan repayments, and now going forward, dividend repayments will come to the front. It is so that the coal prices are off their highs, and what drove those prices is obviously very abundant to you and your viewers. And whilst there will be amelioration in prices, we do see iron ore picking up this quarter. We see manganese ore picking up. And so again, we expect a reasonably good performance going forward. You know, with some level of caution, we do see that some of the logistical challenges and constraints we had are starting to ease. There's a huge amount of collaboration in terms of going after what is short-term opportunities. I say low-hanging fruit in terms of how do we get the logistical performance up, and so that we can deliver the volumes. Overall, pleasing result.
Mike, you already touched about the logistical challenges that impacted on your thermal coal, iron ore, and manganese, and you're saying that those are easing right now. What's behind these logistic challenges? We've heard from other fellow miners talking about Transnet and the challenges that have been brought on by those logistics challenges, in particular when it comes to the export of commodities.
We need to really qualify what are the factors influencing those state laws. Pointing a finger doesn't help you and me. Even if you want to believe that you're not part of the cause, you certainly are part of the problem and need to be part of the solution going forward. So, and I raised that with you. We need to work hand in hand going forward. There were a number of external factors that have played a role in this. The one is the issues of maintenance, the legacy of spares, unavailability of spares. There's been a significant amount of theft, particularly cable theft, that needed a huge amount of interventions. Last but not least, there was a procrastinated strike. So when you combine those and you weed those out, and assuming that we are getting better at the maintenance, we're seeing indications, the theft is a lot better in terms of are being managed with new technologies. And we certainly hope there's no strike. There was also a plague of locusts, and you'd say, well, locusts, well, you put oil on a trap, it doesn't go very well. Okay. So I think we need to distinguish between those factors and what is really in our hands. And that's the point I make, is that even if we make baby steps going forward, every time we move better than the last 6 months is an improvement on the bottom line. And so that gives me confidence. There's a lot of goodwill on right from the very top, and sense of urgency and determination to fix that for all of us combined as stakeholders, Xolani.
Mike, it sounds like you are singing a different tune to what the Minerals Council of South Africa has been saying, even going as far as calling for the CEO of Transnet to be let go or to be fired. But you are saying that we need to collaborate and work together.
Xolani, I am not detracting myself from any comments and challenges that have been made. What I'm saying is, yes, acknowledge there's a problem. Let's join hands. And I think that probably was initially the single biggest frustration from the industry, is there were perceived to be no open doors and willingness to collaborate. And I'm saying with a huge amount of humbleness that we are seeing that these are taking place. We have steering committees in place which are actively working with all the way up to board, up to Transnet. We've had massive interactions and collaborations with Eskom and understanding those needs and sensible to where we can cut power in the most efficient way. For an example, instead of the industry being pulled down when we had instances of load 6, if my memory bears me correct, as an industry, we would go and stick up our hand and say, we'll pull our smelters down. You know, they're the least efficient, but we save a bigger part of the industry and move the productivity. It's that level of collaboration, I'm saying, Xolani, that's needed. And I'm not distracting or walking away from the comments made from Minerals Council. But we need to move together forward.